Okay, good morning. I'm going to get right into the stock market technical analysis. If you're new to the channel, I go through trade ideas, I go through technical analysis. We're looking for opportunities to make money in the market. All right, so I'm going to start off today with IWM. So we've got an objective short entry right here. Let's look at the daily. On the daily chart, you can see basically we had this uptrend line right here, all right, and we broke. Now we're doing a back test as of right now, but it offers an objective short entry right here and now. If I look at the hourly, you can see clear negative divergence on the momentum indicators. So this was a a bearish rising wedge. We broke to the downside yesterday after the Fed did the back test, sold off. And we broke this trend line right here today. So there's your breakdown. Now, maybe they'll try to recover it, but I think it offers an objective short entry right here. Okay, we're back testing the trend line, and it seems like this is where we would get rejected for the next leg lower. Another way to look at this is a potential bear flag. So you've got a flag pole here, you've got the flag, and it really projects us all the way down to about 167.55 on an impulsive breakdown of this little flag right here. Okay, so that's IWM. I like it right here. You can line it up with the futures, RTY, and you can see here on the futures, if I go to the hourly chart, this is the uptrend line, kind of the corresponding uptrend line, similar to IWM. And we haven't, we broke down today, broke that trend line, but they snapped up and recovered it. However, you can see we are running into what I would say is the first level of resistance, where I think a pullback is very likely, if not just an outright failure of this trend line right here. But you can see it's right about 1797 right through here. And then as I roll out, look, you can see support, support, support. We broke it. It should be resistance. And so that is where we are at right there. That's resistance. Should be good for a pullback at a minimum down to this trend line again, but I'm more expecting it to probably break the trend line. Okay, so we'll probably trade down here maybe all day tomorrow, chop around, and then ultimately I think we break. So I like IWM. If you're, I don't trade the futures, but if you're trading the ETF, I like IWM to short right here for that move lower. Let's look at the triple Qs. So on triple Qs, starting out on the daily chart, you'll notice we had that kind of wedge pattern right here, broke it impulsively really yesterday. Today, gapping down, more selling, a little bit of buying coming in here just to fill the gap, but still on the daily, it's just we're making lower lows. We're down 1%. Looking at the hourly chart here, so maybe they want to rally and fill this gap right here. That is a potential area of resistance now to fill that gap, about 265.59. But at the end of the day, that daily chart just is lower. And we had a pretty impulsive break as well of some support levels yesterday. So if I go to the daily, you'll see here that we had some support right about 269.50, and I talked about that as a key level, especially in the private group. Guys, if you're not in the private group and you're interested in getting additional insights, additional trade ideas throughout the day and not just waiting for the daily video, join up. It's $5 a month, so it's everything on my channel is extremely affordable. I'm not trying to price gouge anybody. It's not going to break the bank, let's just put it that way. Join up, link in the description below. You should just see a join link. And then if you haven't taken the course is going to teach you just the baseline skill set, give you guys a checklist, give you guys all the skills needed to understand these charts in a more meaningful way. So link in the description on that one. So again, we broke right through that 269.50 just impulsively, boom. So the nature of the breakdown is one thing that I really read into. The fact that we just broke that level and we're just below it. It just, in general, everything looks extremely bearish, and I think we're going to have that final move, or that kind of a looking for really impulsive selling, to be honest, not just a grind lower. I am looking for kind of a crash price action. If I see that, that's going to tell me that we are coming to the end of the move, or most likely coming to the end. And what I'm looking for is that kind of crash action down to about 238.50. Maybe we undercut it and go down to 218, but 238.50 is definitely the level. But I want to see it in a nice, I want to see a strong sell-off to get down there. That's going to tell me that we've maybe hit a near-term bottom for the year. Okay, one thing I want to point out, I noticed today on Google, and to really point this out, I need to go to the weekly chart. But on Google, and Google changed their name. I think they came out in 2000 or so, but they changed their symbol when they split to the alphabet. So this is just the Google chart, but you can see here this trend on a weekly chart since 2014, support, support, support. I throw this out right here because this is COVID, kind of just a outlier. And you can see that we basically were holding this for the last couple months, for a month or so. And sure enough, big weekly sell signal right there. Big impulsive breakdown. So unless they can have some sort of monster rally tomorrow, this week is going to close down here with this sell signal. And it's going to indicate to me that Google, one of the major FANG stocks, is just fully entrenched in a bear market, and we're heading a lot lower. So just something to point out there on the weekly chart. This is really telling me that the bigger picture is we're in for a much more massive bear market that's going to last a lot longer. I don't think this is just going to be a 1 or 2 year bear market, to be honest. I'm really looking at potentially a decade-long bear market, or where we basically go down and maybe just go sideways, kind of a lost decade. So something to look at there on Google. I don't see the same. I mean, you can see Meta. That's basically already crashed. We're heading down towards. I mean, these are prices when Meta went public back in 2012. But I mean, we're heading down there. So it's clearly in a bear market, wiped out gains for many years. And Microsoft, you can see Microsoft has started to break. These are all weekly charts, but this was really your uptrend since 2016. A nice strong uptrend. That's been broken. That tells me we're heading down to the more major uptrend line, which is all the way down here at 133. So I'm seeing lower prices over the coming months, basically. Maybe it takes us a year to get down there, but down to 133, which is a drop of, another 40% or so. And Apple, definitely one of the strongest. Apple's been holding up. I think Apple's got a ways to go down. So I've talked about where I think Apple's heading. But still, we'll get to Apple when we see some more development. Okay, let's look at gold. Gold, gold bullion, not really selling off that much. The miners are getting crushed today a little bit. Not horrible, but there's definitely some miners that are selling off. Barrett Gold's selling off pretty strong. And but gold's barely down. So again, gold still has bullish divergence. Each new low, including the one we just made today, right here, divergent low. All right, so we continue to have a constructive chart. We just don't have a catalyst. We don't have a buy signal. So, we can continue to build these divergences for a while, and we can eventually, if we're going to sell off strong, we could maybe even take them out and burn through them. But it's still there as of right now. So gold bullion looks constructive. When I look at some of the miners like Newmont coming down, making a new low today, I kind of adjusted my trend line a little bit because there's a potential trend line here that we could line up with. We've got one support here, one there, and looks like we're heading down there. So I don't have 3 reactions. I'm looking for that third, and I'd like to see that. Another potential trend line is if you just mark it right here like this. If I can grab the little dot, and maybe something like, I just can't quite make 3. So somewhere in here, it looks like we've got the support line. Also bullish divergence as well. You can see on the momentum indicators here, we've got bullish divergence. Now, if we continue much lower, we'll burn through those. But as of right now, it's there. And if I just zoom out, you can see clean bullish divergence. So we'll see if that remains, but these are constructive. These miners look bullish. I mean, these charts look bullish. They look constructive, but they don't have the momentum. They don't have the price action yet. So nothing that tells me time to buy these things yet, but definitely, they just continue to look kind of constructive. So I'm looking for signs of life here, signs that they're bottoming and going to rally. Until then, we'll see. Silver is kind of interesting today. SLV, you can see it's kind of rallying, and I look across the board at some of these silver miners. AG, it's it's doing better than some of the gold miners, so that's kind of interesting. This all comes down to the dollar, everyone. So again, dollar rallying today. If I look at the hourly chart, we had some resistance right here at 11160. And we just kind of burned through that, just popped right through it. And that was yesterday. We kind of rallied through it. So as of right now, I've got resistance right up here about 113.32, and we'll see how that plays out. But the dollar's still in an uptrend. And if I look at the daily chart, this is your uptrend right here. The dollar is just going to remain in an uptrend until the Fed backs off its rate hikes or pauses. Okay, which I think is coming soon, even though the Fed said they weren't going to. The market will force their hand. Until the market forces their hand, they will not pause or pivot. But when the market starts crashing, that's what's going to force their hand. So when that happens, it's very likely that the Fed will come out and say, we're going to be data dependent. We think we're seeing improvements in the job market. By improvements, they mean job losses. But that's when they'll start to pause. They won't do it until the market crashes. So the market's going to force their hand. And when that happens, that's when the dollar starts falling. So that's it. Longer term kind of stuff. Technically, still in an uptrend. No reason to short the dollar. Gold's kind of, building a base. It's constructive, but no reason to get long yet either on some of these miners. Let's take a look at the VIX here. So the VIX, if we're going to get that crash price action, we should finally see some sort of strong upward move in the VIX, all right, popping up, getting us up in the 50 range or something like that. And we just haven't seen, really through this entire bear market that started this year, we haven't seen volatility really spike. So in order to signal a near-term bottom, we need to see volatility spike. We haven't seen it. So let's take a look at the VIX. Right now, 200-day moving average right there. We're kind of range bound. I mean, the VIX, is a little bit of a range right through here, but and we're below the 200. But when I get down to the hourly chart, well, actually, let me look at the daily real quick. Yeah, the daily doesn't tell me much. When I look at the hourly, though, you can see we are building some bullish divergence here on the hourly. All right, so you've got, if I can grab the line, I'm not sure why my tool's not letting me. Well, for some reason, this isn't letting me draw this line here. It's locked. I don't know what's going on. But we've got bullish divergence on the momentum indicators. You can see here we're kind of drifting lower. These are divergent lows. So I'm looking for a pop, especially if we start to see the market crashing. We should get that big spike in the VIX. So, ways to trade it. VXX, no spike yet. But again, if, we start to see that crash, then we should get that spike. Or UVXY is another tool. They both look the same, but at the end of the day, these things will rally and will spike up and move pretty strong if you're going to get that crash kind of action that I'm looking for. So just want to point those out as potentials. Obviously, everything's kind of pending on whether we get rejected in the Qs and the IWM when we start to sell off here. Yeah. Couple individual trade ideas that I like, at least for shorts. Really everything for the most part is kind of a short, except for obviously that volatility trade. Forward, so on the hourly, well, let's look at the daily. Daily, you don't see much in the daily here. We have kind of this uptrend line here, but we've broken that trend. And we've got some support on the daily, which really comes back to this support zone right in here at about 1270 down to about 1266. In the member group this morning, before the market opened, I pointed out that Ford was going to open right at support, and it had a high likelihood of a bounce. Okay, so that has occurred now. So just again, if you took that trade or if you covered your short, that's 4.5%. That easily pays for the membership, probably for the entire year, with one trade in the morning that we pointed out. So now again, we've rallied into resistance at 1341. So I think we get rejected here and start to sell down. I'm short this thing again. looking for lower prices. When I go down to the hourly chart, you can see this is what it looks like. We've rallied into this resistance line right about 1340, and I'm looking for this to reject and head lower. So that's it on Ford. Again, why, I'm expecting lower prices. You've got negative divergence on the momentum indicators here. And so these were divergent highs, each one of these. We were watching this trend line. We broke trend, ran out, back test. We should roll over here. So that's it on that. Okay, First Solar. So this one's, I just want to caveat this a little bit. This one's a little bit of a runaway freight train. So again, from my perspective, it's higher risk for sure. So lower positioning size, I think, is important because could be wrong on this one for sure. I'd say there's a higher probability that I'm going to be wrong on this trade. But I think if I'm right, there's higher potential for reward. We're looking at a 5-minute chart, so we've got negative divergence building on the 5-minute here. There it is on the PPO. So, this was a divergent high in the RSI. This is a divergent high on both momentum indicators. I'm looking for this to start to roll over. On the hourly chart, minimum target right now would be this trend line right down here. We've got a couple reactions right there. So minimum would be 150-ish, 155. But I think it'll be lower. I think we'll break that and probably head down to this 140. It's about right in there, 144-ish. All right. So that's my first target, would be 144. And then quite possibly lower. When I look at the hourly chart here, you've got negative divergence on the hourly. Okay. So we've got negative divergence on short time frames, hourly chart. I don't think we have anything on the daily. Let me double check. Yeah, we do actually have negative divergence on the daily. Not fully confirmed, but you can see the highs that we're making now are divergent highs. So if this starts to turn down, that will confirm that daily divergence. In general, we've got negative divergence across multiple time frames, and it just tells me that we are likely going to start to head lower. Likely this will take place if the market starts to come down and kind of crash. This should come down as well. So I like it here, but again, I've liked it before. We caught this short right in here. We did catch that, but it started to rally, and I think it's another short, all right, for another move lower. So that's all I have on it. Definitely higher risk though. And JP Morgan, you've got a bearish rising wedge pattern, broke it, and we're just kind of trading sideways. So again, just to reiterate on this one, negative divergence on the hourly, nice clean negative divergence. We have a breakdown in the sell signal, but for me, because it's just over the 200-day moving average, 200 simple moving average right here, my sell signal is going to come on an impulsive break of that. 125.14 is the moving average as of right now. I need to see an impulsive breakdown from that level in order to want to get short this thing. And if we get that, then I pointed out the key levels of support, 119 and 105-ish right in there. So that's it on that one. I think that's about all I got, guys. So again, if you haven't taken the course, I recommend it. I think it's a good, there's a lot of value there. Priced affordable, link in the description below. And private member group is available if you're interested. We're covering lots of stuff in there. So join up if you guys are interested in that. I'll catch you on the next one.